I just start with the S&P just to let you know what I'm seeing and stuff like that, because typically you're going to get the stocks are going to follow what the indexes are doing. And we've been, obviously the bulls have been in full control of it. And I, we're, I'm kind of looking at this as the final wave of this, where we're going to get some kind of decent little pullback. And really, it's the kind of the wave structures that I think Michael was just showing on it, where we have clear bearish divergences or sell signals that are in place. And some of the longer term charts that I look at, like the NIAD, advanced decline, and put call ratio, they're each one of them is throwing up some major red flags right now. So they can be ignored, they can be fixed, but until then, I've been recommending to all the people in our trade room, as well as on our email list, to be a little bit careful right here, because one of the things that I've been really pounding the table on is the put call ratio. So let me just see something, if I can get that up. Bear with me 1 second. Let me do this. Search. Okay, here we go. All right, so let me do this. Okay, so share. So this is what I'm talking about with the major red flags that I'm seeing. And again, they could fix themselves, but right now the put call ratio right now is basically telling us that there's zero protection. So everybody is only looking higher. And the one thing that I'm pointing out is the last time we've seen it at these levels, David calls it 10% correction. I'm not sure if that's going to happen. It wouldn't surprise me, but right now this is the first really major red flag. And then the next one is really going to be just like the breath. It's not following along with what the markets are doing. So this is less of a red flag. We've seen that before, and it fixed itself. But here's one that is, that I show all the time, and this is the NIAD, the advanced decline. And every, say, top that we've made that has been pretty significant has come with a NIAD sell signal. So that's the red line right here. You can see that's heading down as the S&P is heading up. So those are really the three main, say, red flags that I'm looking at right there. Is those internals. And then we have this is a daily chart right here of the S&P, and you can see we have some sell signals there. Wave structure could be complete. A lot of times they do some kind of subdivide or something to that extent. So that may happen. I'm on the side. I kind of just have this feeling that they're going to try to get the S&P up to the 5,500 level. I know Michael, that was just before me, was explaining about the options expiration. It's triple witching on Friday. So I'm anticipating volatility is going to pick up after that's behind us, and from there it's seeing some type of backing and filling, or just a move down to the 5,300, something to that extent would actually be healthy for the market. And then the last chart that I'm going to show you here on it is the weekly chart, which again you can see the wave structure. We're looking at this as a fifth. And we also have sell signals on this as well. So unless they fix themselves, I'm telling people to be cautious right here. I'm not saying that we can't head up to 5,500, 5,530. I'm saying everybody's expecting that right now. And typically, I've been doing this for over 30 years, and when everybody's looking one way, that's usually when the master planners like to pull the rug out on things. So, those are really those are the red flags that I'm looking at right here, and I can go in and whatever symbols you guys want me to take a look at. If you want me to just keep going over some of my charts, it's up to you. But I can pull up whatever ones you want and give you kind of a top-down view of it, because I like to go take a look at the weekly chart, what's going on with those, and then move to the daily and then into the shorter time frames. So, is there any stocks that you guys want me to take a look at, or Microsoft? All right, I actually like Microsoft. Alrighty, hang on one second. So let's take a look here. FT. Okay. So I'm just going to shrink this right now. So with Microsoft, it's in this AI kind of craze right now, and they're probably best positioned for it. So if we're just if I'm looking at it, this is a daily chart, and this looks like it is the final wave five here. But the way that this is setting up is we have one, two, this is three. So three really could extend it. And one of the things that I like to do is kind of just see the different patterns that are in place, because when things are making new all-time highs, it's kind of hard to figure out exactly where the top will be. But you can see that we're getting close to that right there. So that's the daily chart. There are some sell signals in place here, but I'm kind of on the side that I would anticipate. Let's go to an hourly chart right here. 20-day hourly. So really the way that I would what I would expect on this, let me just move this back, is seeing some type of backing and filling right here. So I'm just trying to get these things in order here. Come on. Here we go. So here you can see 1, 2, 3, 4. So we have the 5 waves. So seeing a pullback come down somewhere into the 436 area would make sense. It'd probably be even better if we head here. But again, with just with the major red flags that I'm seeing, and if we see the Qs and the S&P and all that start heading lower, I'm not seeing any of these AI stocks that have gone up an astronomical amount sustaining if we get that. Like I said, I'm kind of anticipating that we're going to get somewhere between a 5% drop that could start anywhere from Thursday or into next week on it. But that's what I'm doing. So it looks like, just as far as a wave structure, I would be anticipating that we come down somewhere into the 436, maybe even here at the 432. But again, we have the sell signals. We're getting into the oversold levels here. So if they, right now they would kind of have to get it through this 443 level. If they do that, that's when, you have your regular moving average, but this would be kind of the better landing spot anywhere between let me just move this up. So anywhere between the 436 and I would say anywhere right around here, the 432. So this would be a decent buy area. Now, again, really the risk is if this is an important top, then there's a good shot that we could come all the way down to the 405. I'm not saying that's going to happen, but if we do get a steeper pullback, that's where I'd be anticipating it. So, all right, Microsoft, JP Morgan. So let me pull up JPM. Alrighty, so bear with me one second. Let me switch these over. Okay, 1 year daily. So JP Morgan, it looks like if just looking at the wave structure on it, it would be that we kind of completed 5 waves up here, and you can see as we topped here, we don't have any sell signals, so this may be some type of wave 4 on it. And again, the way that I would look at it would be anywhere from if it was going to make a bottom, if it needed some more room on the downside, I would be looking right around that 189 level. That looks like a good one, but overall, it looks like it's just consolidating. So I'm thinking it would be higher, but again, a lot of it has to do with just what the overall market's going to be doing. So this one, the you could see this resistance right here. This is that big drop right here. So there's sellers that are coming in, but we also have this. This is where the buyers are stepping in, somewhere right around that 189. So if they break through that, I think you'll get a chance to get it somewhere down into the 180, possibly the 178 77 level. Um, it's getting into the oversold level. So buying a little bit. Let's just take a look at the daily on it. Okay, so 60-minute chart here. Again, it looks pretty organized on the way down, even though, we're going from the 205 down to, we made it down to the 190. It was a decent pullback. It looks like, you could see that we actually have some sell signals right here, and it kind of makes sense. So I'm not against J.P. Morgan here. I think that if it comes down, I think that really a really good buy spot would be right around that 189. And if it breaks through that, then really the next buy spot's going to be coming down to the 179. And if they can break through the 200, we have our two previous tops right here. That would be resistance. But it looks like we're getting into the overbought levels, so some backing and filling. But again, this looks kind of organized. It doesn't, there doesn't really look like there's a whole lot of panic with it. So let me just go to another one here. KT. Looks like it's pretty thinly traded here. Just taking a look at it, it does look like we're just kind of forming some kind of bull flag here, which would be suggesting higher. But if typically what's going to happen on this is that they'll break out of this to the upside. And the measurement on it is 14 down to third, so it's about $1. So if it broke out of here, we're looking probably somewhere right around this 1450 level. But it looks thinly traded, so I'd be a little bit careful on it. I don't really know anything about that particular company overall. ODP. Ooh. This is an ugly chart. Hopefully you're not long this stock, because this thing is, we're looking at almost 52-week lows. Let me just go to the daily. Yeah, so right here, there's some support, but there's not a whole lot that that there's to like about this one particular one. The one thing I'd be careful of is they may come and try to close this gap at the 32 level. So it's if we do come down to here, like these are your next two support levels. It's going to be the 34.76, 32.10. If it comes down there, most likely we are going to get some buy signals on it. So it could get a bounce. This is not anything that I would be going crazy over. It just right now looks like, if we get a move back up to the 50 level, that would be good on it, because there's an open gap right around here. So let's Amazon. I was actually just looking at Amazon. So let me do this. All right, we know obviously they're going to have to get above the 188 level. Really the 188 up to this the 191. If they get through it, then we're probably going to make a run for the 200 somewhere in that range there. But it's right here. You can see we have sell signals on it. It's been pretty strong overall, but this looks like it's actually a head and shoulders pattern. And if this is the what it is, I'll actually draw this out for you. I actually keep things pretty simple when I chart. I don't really look at a whole lot. There's some things that I do look at all the time, but I don't have all the other stuff up there. So if this is let's say they're making a head and shoulders pattern here, it's kind of hard to say where where the trend line would be. It really let's just do this. I'm gonna put it through it a little bit. I would say the neckline is going to be right around there. So it dropped through this, but you can see how you have the clear head and shoulders pattern. So if this is going to play, let's say it is a head and shoulders pattern, and we're going to take some kind of break in the market, the size of this move is now, what we're doing is we're taking it from the head and we're going to bring it down to where it breaks through. So let's say it broke through at somewhere around that 175 level. The downside target is coming all the way down here. So this is your downside target would be 157. I'm not sure if they do it. You can see we have an open gap right there, so there could be some reasons why they do that. But again, I think that has a lot to do with what is going to happen in the market. And you can, the big players right now are actually down today. So once it makes this kind of low here, whether it be at the 163, which is a moving average, or it follows the entire, say, pattern and it comes down, it's probably going to be a really good buying opportunity. And then if we just kind of take a look at the wave structure, we have 1, 2, 3, 4, 5. So that's 1, 2. So it looks like we finished a wave 3. So if that's the case, then really what we would be looking at as far as a downside target would be, and you see it kind of lines up just with the head and shoulders pattern here. So you can see it makes sense right here. This would actually be hang on one second, I want to zoom out. So if it's an ABC move, this would be just 100%. We're coming down to this, down to the 171. This is typically where, if we did make a top, we come down to the 160 to 178 area. So that would be where I'm looking, and it would make sense there because it would burn off a lot of the overbought levels that we're seeing and also find some support, fill this gap. So I wouldn't chase it up here, and it doesn't mean that it can't head higher. These things have been complete animals. So it's from a pattern and a technical view, I'm not really seeing the really big sell signals in place here. Just because this top right here, you can see was is pretty strong on this. So if we would have made a new high, most likely we were going to be getting a sell signal. So this one, I would wait on it and see if you can get it lower. That would be kind of my suggestion on that one. Alrighty, let's go Pfizer. Pfizer's usually pretty boring. Okay. I haven't really followed Pfizer in a while. When I worked at an options desk, this was we did the calls on was the calls and the puts was on Pfizer because we had people that weren't vested. They had stock options and they weren't vested, and we were able to actually use those to write covered calls and stuff. But this is not good. So if I'm just going to look at this from a wave structure, let me do this. I'm going to go out a little bit further on this because this is pretty bad. Let's go 20 years. Weekly. Okay. Yeah, this is nasty. I haven't really looked at it in a while. So you can see this is the support is right in this neck of the woods here, pretty much where we made the low. We do have buy signals on the weekly chart here. So let's just take what I'd like to do is take a look at the fib numbers. And if we were going to take it here and bring it up, it fell in between the 62 and the 78. So this is support. So this is actually, it's not as bearish as I thought it was when you pull out the weekly. But this thing's been under some serious selling pressure. So if it came down, I'm at the 78% is 21.96. If you wanted to try long, this would be it. There's reasons to believe it's going to bounce, but I don't know if it's going to get back above the 37. If it does, then we could be heading higher, and this was just some massive wave 2 down. But I think right now, I mean, because you can see we're pretty overbought right now. So if we come down, I'd be looking at that 22 level to start building a position if you're looking to do that. Well, what I look at for sell signals is I use the momentum indicators that I have. So if the sell signals are basically when you look at these let me make that a little bit bigger for you so you can see it. So here you can see that we have this massive move right here, and there's no sell signals on it. So that's kind of hinting that once we do make this bottom, that they're going to come back up and probably test these highs if they're going to follow it. But you can see right here, we didn't have any sell signals at all because we were going up on it. We pulled back and then came straight up. So it just kind of reminds me a little bit of it. I meant Pfizer that looks the chart wise doesn't. I mean, even though this is ugly, it looks pretty. It looks pretty good. All right, the Qs. Oh boy. All right, Qs aren't doing much today. I'm going to show you another screen. Hang on one second. So let's take a look and see what AI is tagging on that. So I'm going to share a new screen for you. And I use this I do a lot of the credit spreads. That's my big thing. We really just do it with the S&P 500, but I've done some Qs. It's just you get better premiums from using the S&P 500. But so this right here, and this is really the way I look at these. So let's just say I'm gonna go. Let's go to next week. So say the 28th. Okay, so what this gives you is it gives you, so this is, if I click on the neutral, bullish, all these are going to change on me. So we're going 1 month out, and you can see the bearish end of this is going at 34%. So probability of profit is 34%. They give you what you're looking for. I could put in put spread, I could put in credit spread. So this is saying, you have a 40% chance to, if you went long the 480, 478, and then you're short to put 476. This is your profit margin. Now, what I kind of like to do with this is see because they're basically based off of options. This is so. Right now, they're saying it's a kind of a dead heat. So this expiration of the 28, it's 40%, but there's times that I'll show you an example, and this is really where we get our where I do we get our credit spreads on it, and just using your regular chart wise. And one thing that I've done, and this is really why people are doing the education part, is I'm able to I created a formula that is you could do these iron condors if in neutral, where you're basically selling the 55, buying the 55.05, selling the 54.60, and buying the 54.55. So this is what it's telling you. It's got a 76% chance. This is on the 18th. So once we put those in, there's a way to put this stop in place, because they're not going to take them both out, and it's it's more than a 99% chance that either if you get stopped out, you're not going to lose a penny. You just break even. So you have these big spreads here, and if you put your stop in place the way I kind of teach everybody, if it comes down and it takes a stop out, you broke even, because you made the same amount of money on the call side is you lost on the put. And if it stays within this bracket, then, you make, this is $35. So if we were going to, really the better way to do it is you can go into the 20th because you're going to get more premium on it. And you can see 155. So if you put in 3450, you can make 1700, 74%. But again, you're putting in your stops that it's not a break, it's a break even if you lose. But this is something that what I like to do towards the end of the day, to get an idea of what the options people are pricing in. So this is just the S&P. I'm just going bullish, and then I click on bearish. 47. So right now, the majority of options are, well, for this particular one, 47 is looking lower. There's times that, and a perfect example was yesterday when we were up, the bearish probability of profit was at 98%. So when we were up at these highs here, there was a 98% chance that we were going to be coming. Let me do this actually, because that's a different. Okay, so yeah, when we were here up at the 54.87, the bullish side was showing a 1% chance of probability in money, and the bearish was giving us a 99. So it gave me a really good idea that up here, I still had a feeling they were going to try to get it up to the 5,500 level. They didn't, but I was building my short position, and I closed it at near the close, and it was a great, a little put trade that we had. It wasn't a credit spread because this one we would have been stopped out right away. But this is one of the tools that I really like to use on that. So with the Qs though, going back, let me just take a look here for you. Sorry about that. I got drawn off. So there's sell signals on the Qs. You can see right here where, this was our highest one. There was no sell signal. So this is a little pullback, and now we headed up. And now you can see with this little pullback and up that we do have sell signals in place. And this is on a weekly chart. So it's again, something to be a little bit dangerous. It could be dangerous, but the NASDAQ's been leading the way. So to, kind of assume that it's going to play out. I mean, it's an animal to try to short. I don't really get involved with it. It moves way too fast for me. So if we just going to try to peek out some patterns and where possibly we could see some type of top in place, you can see that we broke through this the wedge here on the upside. So it's kind of it's hard to say where this will top, but I would be, again, just with the sell signals that I'm seeing on my longer term charts, unless they fix themselves. When the NASDAQ goes down, when it loses steam, because you remember when we were coming up to this one, it was the same thing. It was a handful of stocks that were leading the entire NASDAQ and the S&P up. And then when it fell really hard on it. So this one, as far as a wave structure, it could be in some kind of fifth wave, but it looks like it may subdivide. So if it's going to subdivide, let's say 1, 2, 3, 4, 5, this is 1, or let's say, I'm sorry, so 4 and then 5. So this is 1. So what that would be looking for is a pullback that would take it down to the 417. There is this support right here at the 3086, but this is where the actual downside target would be down at the 257. If this was going to play out like a perfect wave structure, which, like I said, I'm not suggesting that at all, especially with the NASDAQ. So let me.
Hey, Gary, I just noticed.
I'm sorry, I never switched it over. Okay.
Yeah, we're still seeing the SPX.
Okay, my bad.
Yeah, okay.
Here you go. Yeah, I forgot I switched it. So again, you can see we have sell signals here. From a wave structure, it's kind of hard to say where we are because you have 1, 2, 1, 2, 3. This could be your wave 1, ABC down 2, and now we're in a wave 3. Which once this tops, again, this is I would be anticipating that the move is going to come somewhere down into the 412 level. So it's a pretty decent drop. And the only reason I'm saying that is that if this is your wave 4 and a wave 5 up of 3, they usually come back down and test a wave 4 again. So if this is going to follow, like I said, I would not. I'm not suggesting to short the Qs, man. You're just asking for trouble. You could make a lot of money on it, but I've seen more people get wiped out than have made money trying to short it. The path right now, the least resistance is higher, but these are giving you some warning signs right there. So is that, do you get, I have an idea? Now let me just, what I want to do actually this is, let me go to a daily chart so we can take a look at it. Day. So again, you can see where, we had some sell signals that were in place, but it's not really there. So again, that's kind of supporting a little bit of a pullback and then back up again to form some sell signals. And like I said, I believe that what I'm looking for with the S&P heading down, somewhere into the 5,300 level, I have a feeling it's going to be pretty fast. So just get prepared for next week. Could be pretty crazy overall. But this is, as far as the wave structure on this, a little bit of a pullback and then up again, and that would give us probably some sell signals that we'd be looking for. Okay, so any other is good? Is that an actual stock, or are you just saying it's good? I'm confused on this one. I don't know if this is a stock, but let's just see. All right. Oh, Goodyear. So if this is Goodyear that you're looking for, this is a nasty chart. there's nothing good about it. And really what I'd be looking at this is we're in a bear flag, and this is going, if this is what you're looking at right now, you can see it's following it perfect. So the next move, if it's going to follow this pattern, is going to be to the downside. And we'd have to take a look, go to the weekly chart to even figure out where the downside would be on it. So let's go week. Yeah, hang on one second. Alrighty. Okay, so this is, you're looking at almost going into all-time lows here. If this breaks right here, the next support is coming in right at the 759 level, so it's almost another 50% haircut on it. And if it loses that, then, you're looking at it coming down to the 536. Now, if it got down to those levels, Goodyear's a solid company. Just from a fundamental end of things, there'd be a chance. But technically wise, it's suggesting that the next move is going to be lower, and it's going to be probably heading somewhere down into these levels. But it has to obviously break through the 1083. If it does that, then you could just take a short position and look for 760 to come into the play, or possibly 536. SLB. Sorry, I'm just getting over a cold. All right, SLB here. Okay. Schlumberger. Let's take a look. Again, the pattern looks kind of dangerous where, it could be another one of those little just bare flags that are forming right here, and it should be higher than where it is on it. If it was going to pull itself out, but it's yeah, I would for this one. This is, if I was going to look at it, I would say you're going to get probably some buy signals right here, but the support levels that I'd really be watching for are going to be down at the 36.75, and then the 30. Oh, sorry. Here we go. The 30.73. So these would be the areas I look now. If the polls can get it above the 334, obviously we have this resistance right here. But if they get above it, then we're coming up to the to the 79. So it looks like it's breaking down on it. It's up today some, but if if it comes down, into these levels right here, I mean, you could be looking to buy. It's pretty oversold. We do have a little bit of a buy signal. It'd be risky, but I think the risk reward is you're getting long here, and you could literally just put your stop at 25.81. It's a little bit of it, but the thing is that if it holds these levels, then you're looking at a move coming up to the 55 level. So risk reward on that isn't that bad on it if it does have a little bit lower. Shopify, is that what do you, what do you mean? We're just guessing. What? Okay. So anyway, it's SKX. Let's do this. I mean, this looks pretty strong right here. There are a little bit of some sell signals on it, but it looks like you're in some kind of wave three on this. And as far as where it could be going, just take a look. Nope, that's not it. So really, it'd be following this trend line right around here. So up here would be some resistance on it. It's a pretty strong stock, but this gets a little bit dangerous. These little wedges right here. So if it does have a pullback, I would be looking at, let's just see some fib retracements. Let's say it stops up here. You'd really be looking at probably a pullback coming down to the 63.47, but more likely down to this to the 54.54 level. So this would be the buy zone before we head back up again. I wouldn't really chase it right here. I just think it's a little bit too dangerous, especially moving from 55 up to 73 in a very, very short amount of time. So that would be, I'd wait for a pullback, but the chart looks pretty good overall. Do you know the ticker symbol for Shopify? I don't have it offhand. Hell, this looks like a decent chart right here. 1, 2. I mean, there's no real warning signs. There's a little bit here that we could get a pullback. Now, obviously, the resistance is fairly simple here. It's going up to the all-time highs at the 90 level, and then support-wise, you can see it's pretty strong in this area right here, going from the 74.40 down to this to the 71.80. So these would be if it pulls back, this would be the area that I'd be looking to buy. The only risk is if it gets taken out, then really the next support level isn't coming in until the 57.85. But I think that this looks like a fairly strong chart overall, so I don't mind that at all. Oh, shop. Okay. All right. Dangerous. Be the first thing that comes to mind. Again, it just looks like it's some kind of just bear flag that's here right now. It's you can see we're pretty oversold right here. So I would say that it's going to head up, and I would be looking probably to test these 91 highs again, because if it's just going to follow this, and you can make it pretty simple if you're looking to trade it, is if you got long, you're simply putting your stop right here at the 56.28. It's a 6 point, you're looking at it is a decent little decline. But looking at this, we're looking at a move coming back up to these levels, but obviously it has to get through this 66.77. So if the bulls can do that at the 50, if they can get above these levels right here, then we're coming back up. So it would be an okay buy signal, and you got momentum that's on your side with that as well. So I don't mind that one. TTD. Yeah, this looks pretty nice actually. It's again, it's where if it can stay above the right around this 95.78 level, then the next line we're coming to is going to be up at the 114. So it's a little overbought right here. It could get, it could go further though. And if we're just going to pick out some possible targets, really what I would be looking at is, let's just say here. So you can see if we just did 100% retracement, we're coming back up to these highs. So this kind of makes sense on it. I would anticipate it's got another probably 10% left in it on the upside, as long as, pending we don't get any drastic turns in the market. That's the risk that is definitely out there right now. But this chart looks pretty good on it. It's TDD. Okay, I just did it. Did I pull? I didn't pull up Cisco yet. Okay, so uh, okay. There are some buy signals right there, but this is again where I would be a little bit careful. Would be there. It looks like there's actually two pretty big head and shoulders patterns. So if I duplicate that, here's your head, duplicate, and then here's your right shoulder. This is enormous. I mean, as far as the size wise, I don't know if that would play out on it. That it would be because you're talking about it's probably it would bring it down into the single digits if it was going to play out like this particular head and shoulders pattern. So I don't really like it because if you notice just the distance that we're talking about. So here's the neckline that we're looking at. So if this was going to play out, then you're looking at a move coming. I mean, like I said, it's going to bring it down to some pretty low levels, down to the 16. So I don't believe that's what's going to be playing out. But one thing that I would be a little nervous about would be this one here, because this looks like it could play out and not do any major damage. But here again, it's a head and shoulders pattern. Let's take a look. The neckline is basically right here. So if it breaks it, then let's just measure it here and take a look. Obviously, this is a trend line, but let me do this, clear this off. Okay, so let's measure some distance and give you an idea. I mean, this is a pretty clean head and shoulders pattern overall. So this is looking at a price target, duplicate, to bring us down, brought down to these lows. So right around that 33 level, you can see this is support right here too. So if I was going to be trading this, I'd be looking on the short side and put my stop right above here at the 50 level. Risk 10% on it, but I think that if it does play out, obviously it would have to get through this support right here at the 40. But if this pattern was going to play out, we'd be looking at a move down to the 33. So that kind of makes sense. Google. Just to let you guys know, I do have a hard stop at 3. I have an appointment right after. Okay, Google. It's a monster. This right here. So it's getting some kind of pullback would make the most sense on this, just because of where we are. And I mean, I would not be looking to, I mean, the short end could work, but you're really looking at, let me just move this away. Hang on one second. So we have support right here, and then let's delete those. So if it was just going to do like a 38% retracement or come back to support, you'd be looking at a move coming, anywhere from the down to the 158.81 down to the 150, and then you have the 38 at 144. So if I was looking at Google, I mean, you can try the short side. It's not the easy trade because we don't have any. There's no sell signals at all here. So I believe one of these levels would hold the 58 down to the 44 level, which is decent little drop from there. But from that, I would be looking more to be a buyer of that here because the next move is going to be probably coming up somewhere into the 250 range when everything is said and done. So and my rhyme and reason on it is you just see we don't see any important tops usually until we get some kind of little, it starts to flatten out. When we go straight up, we get little pullbacks, and that's what I'm looking at here. So a little bit of a pullback and back up again for Google is what I would be looking at. Any other tickers? Let me do this. Okay. So I'll show you what they're looking at with the. Okay. Oh, hang on. Did I share it? I did. Okay. All right. So let's just see what the options is playing out with Google real quick. So if we go a month out, this is what these are your anticipated moves. So could come down to the 168 up to the 183 level. This is just what options are playing out. If we just go a month out, go to the 5th. So here you can see 37. They're looking at the bullish side. 31. So no major advantages on the iron of that. But so here we have 182. So if I was ever gonna do some type of straddle or something with it, the way that I would do this is I'd set up I'd go even lower than this. I'd go 155 and 170. Actually, that's not going to work either. Okay, 160 to 150. So let's see what so you can see 72% chance. This is what it's showing you right here. $844 to make 156, and that's on one. That's just one contract. And again, the way that you kind of set it up is that you're putting your stops in place that if it does get stopped out, you're not going to lose any money at all with it. So, snow. Let me go back. This does not look good overall. It's most likely coming down to the lows here. It's nothing good with it at all. Let's go max. Yeah. It doesn't look good at all. Hopefully if you're long, I'd use any kind of bounce back up to the 195 level, possibly even up to the 240. I would get out of it because these lows are going to be tested. So if it's going to bounce, it will bounce here and come up. So it'd be a decent little trade. But I mean, if it takes this out, we're at new all-time lows, and you really don't want to be buying stocks that are making 52-week lows, and rather than having stocks that have momentum on the upside. Oh no, this is snow, right? Oh, am I not? I forgot to hang on a second. I'm sorry. Here. Okay. Can you see it now? So this is what I was pointing out on it is that this is about to be making 52-week lows right here. If if they do hold and we get a bounce, there could be this is a rough one. I think that if it came down here and you're going to look at to trade it, you could try a long trade, very tight stop, but wouldn't be looking for this thing to go much more higher than 196 on it, or even it could go up here. But the overall chart, I mean, again, you're looking at stocks that are, they're looking to make 52-week lows on it. The deltas, I'm looking for. Usually they're in the 23 to even lower than that as far as the deltas that I look for, but that's pretty much what that AI software does. Is instead of me having to go look at all the deltas and all this, it's showing me what where the majority of option traders are lining up for that particular one. So I let the AI give me those numbers, and then I play around with them. But the fact that, like I said, we can set these up where if we get stopped out, you don't lose anything unless there's a massive up down move. I mean, it's never happened since I've been doing this. But it's you just set up on it where we could go a little bit more aggressive on the delta and just say, okay, here we're going to make a premium. But one thing that I'm finding that is a lot better, because we typically do 0 days to expiration on these. So the trades that we put in today they expire today. But the way that I've been really playing around with it is, instead of doing the same day options on it, where today I did Thursdays. So you got more of a premium on it. And, instead of, I really have no desire to hold it, because the stops that I have in place, the way that I said, it's risk free basically. Though it does not count if the stock or the index gaps above or below where your call or your put strikes are. So I don't hold anything overnight on it. But what I've been doing, which has been working out pretty good, is selling the next day's expiration, but still closing them the same night, the same day. So it's like taking the 0 days to expiration, but you just get a little bit more of a premium on it, and it's really the same types of rules. So either with that one, if with the doing it the next day out, we didn't really go into red at all with it. So it's something really, the most that I think that we've ever seen us down on these are like $100, and that's on 10 contracts. So they're pretty safe, and I can tell right off within, I would say, 30 minutes of the trade. Once you start seeing the condor start going against you, you know it's not going to work. So there's times I tell people just to put 1% stop on what you did. Obviously that's given a little bit of room on it, but me personally, I do the stops that are risk free, because I have zero. I don't have any issues doing that. We sell them. I don't buy them. So if we were going to buy them, that would be more. It wouldn't be a credit spread. So we just do the selling. We let it's been working out fantastic. Like I said, that's kind of what I've been training people with the coaching program is what just AI software I use to make trades, and then kind of getting a feel for what because there's going to be days that you're like yesterday. There was no sense putting on a credit spread, because we would have been stopped out 100 times because the market just was kind of melting up. So it's better when it's kind of not doing anything on it, and we could just sit there. But it's I'm basically been coaching people on one, how to look for the trade setup, and then from there doing the have them look at, is today a credit spread, or should you just do just a regular debit spread? Because yesterday you did a debit spread on the call side and you made a fortune. But if you did the iron condors or any kind of credit spread, you're going to get smoked unless you just did the put side of it. So, and that's the only thing in which we do every once in a while. We will put like a credit spread just on one side, especially if I'm looking at the charts and saying that we're, most likely we're going to find some kind of bottom here. And with that, they, will put on a credit spread and then just wait for the market to bounce to put on a call one. So it's like I said, we just do we just sell them. So it's either we're going to make, I think today, for 10 contracts. I think it was it's like 2,400 because I was doing it with yesterday, with tomorrow's. So I'll close those out within, once I get off of here. I want to close those out. But I don't do the futures markets. I really don't. I've looked into it, but I like to sleep, so I'm not a big. You could put on the credit spreads with them, and it could definitely, they can work out. You can do it. This works with any, like I said, any stock, any index, and it's one of the things that we've been putting together. Is putting on a bunch of different trades, not just, we could do the S&P for this. You could do, just do a regular stock wherever the premiums are at and just place the stops in place with it. So, but yeah, no, I don't do futures markets, unfortunately. I trade futures. But I try to stay away from that too because it's just a little too fast. I like to, once I set these trades in place, like we set it, I think it was at we always wait the first hour. And then from there, we set them, and I'll go golfing. It makes no difference to me what, either we're going to break even or we're going to make the premium. And that's basically it. So that's the good part about it. It's a kind of a really low stress type trading thing, and you win a lot more than you lose. And when you lose, you don't lose anything. So, so I'm running out on my time here. I appreciate, everybody that was asking me these questions, and we do, I'll send over, the stuff to David. And if you guys are interested in finding out about it, like I said, it's a small little trading room. I'm probably coaching about 9 people right now. We just started it about 3 months ago. And it's like I said, I give you all my secrets, and I've had so far 4 people that don't even come back into the trade room on it because they know exactly what to do, and they're pretty good chartists. So they get on, you're on a text message too. So whatever trades that I go to get into, I send them out and say, listen, I'm putting on a condor trade. I'm going to be doing these and these. Put your premiums. That's how we're going to be setting our stops on it, and we go from there. So if you guys are interested, you can send me an email. It's Gary@sentimenttiming.com, and I will be more than happy to answer any questions for you. And with that, I'm going to pass this on to David, and I appreciate you guys listening to me.